In 2004, the IRS classified Delaware Statutory Trusts, or DSTs, as eligible replacement properties for your 1031 exchange. Since then, the DST industry has seen a huge amount in growth. Total equity invested went from $1.7 billion in 2004 to $9.2 billion in 22 at its peak. With DSTs, you don't need to acquire properties. You don't need to manage the properties, meaning you don't need to deal with the tenants, the toilets, and the trash. But you do gain access to institutional quality real estate that many investors would have difficulty acquiring on their own. But here's the truth. DSTs are not for everyone. It takes a specific type of investor to maximize its potential. If you're tired of dealing with the tenants, the toilets, and the trash, and your children don't want to take over your real estate empire, but your basis is so low and your tax bill is so high, you might want to consider a DST. If you're running out of time and paying the tax is not an option, you also might want to consider a DST. Also, you definitely need to be an accredited investor. Either you have an annual income of $200,000 a year as an individual or $300,000 per couple, or you have a net worth of $1 million excluding your primary residence. As an investor, you need to be okay with the fact that you're giving up control, which is really hard to do. Can I give up control? Am I okay with somebody else telling me what to do? The risk profile of an investor that might benefit from investing in a DST is as follows. The investor is 60 years or older. They want a quality of life that they're really not getting right now because of the fact that they're too busy dealing with the tenants and toilets and the trash. If that's you, you might benefit from investing in a DST. Or if you're a younger investor, normally your risk profile is going to be higher than being an older investor. But you're also put a lot of work into this real estate, right? And you're running around looking for another replacement property, but you can't find one. You might want to consider a DST, because if paying the tax is not an option, the DST can definitely help when it comes to that situation. Your liquidity needs as an investor is going to affect the suitability of a DST investment. If you need your money in the event of an emergency and a hold period of between 2 to 6 to 10 years is too long for you, you should not consider DSTs, because DSTs are illiquid investments. Remember, you're one investor in a pool of investors within the trust that owns this huge property, and in order to obtain liquidity, that property has to be sold. So DSTs are illiquid investments, and the fact that illiquidity is an issue for you, this investment may not be suitable for you. Well, I can tell you, the more you know, the easier it's going to be. Because at the end of the day, as a real estate investor, you understand what you need to look for. Are the rents realistic? Are the expenses realistic? Is the property tax realistic? And if you know what it should be, it's going to be easier for you to determine whether that DST is a good investment for you or not. But if you're not that savvy or really don't have that much experience, you're going to solely have to rely on the financial institution that you're working with, and make sure that you're working with a good DST broker that has a tremendous amount of real estate experience so that they can help you make an educated decision. The typical investment size or minimum investment required for DSTs is as follows. You have some sponsors that'll take $25,000 as the minimum, but do you have other sponsors that are only going to take $100,000? I know some DSTs that require a $500,000 investment. These minimum requirements are going to determine whether that DST is a good fit for you or not. Look, DSTs can offer unique opportunities for certain investors looking to diversify their portfolios without the hassles of active property management. But please remember that these can be complicated investments So make sure you read the offering documents carefully and ask questions if you don't understand. If you have any questions or want to learn more, call us at 844-533-1031 or visit our website, 1031crowdfunding.com.